What's going on, everybody? This is Jordan with Conquer Trading and Investing. In this video, we're going to be looking here at the markets. We're going to be looking here at the S&P 500 as it has touched the 3232 resistance today and has sold off sharply, closing down 1% and in a huge engulfing candle over here. What does that mean? We're going to look at that in this video, and we're going to be looking at some other interesting macro events, including what the Fed is up to in the next couple of weeks. We're going to look at all of that in this video right here. We're going to take a look as the Nasdaq leading the way down over 2%. Is tech rolling over? We're going to see how to position ourselves. We're going to see that and more, kicking it off right now. All right, let's take a look. Before we do this morning, if you were present there this morning with us, go ahead and smash that like button right now. Go ahead and support the channel. Help Google's algorithm know this is content that you want shared. Look over here. You could see this morning, price was trading right around 32.20 or a little bit higher. And we were looking at the S&P, and a couple of traders were talking about taking long positions. And we were very clear this was our profit target. This was our profit target. 3,200 was our profit target. We were trading about 0.5%, maybe a little bit more above that. It was time to take profit. Of course, we're looking for a break above the high here in June. We're looking for a breakout above, which could then take us we'll talk about those levels once the break happens. But we were looking to take profits in that area. No one should be long at any point. No one should be long at this point. We were very clear about that. We've been clear about that in the run up to that level. What happens now? Should you be looking to the short side? Absolutely not. Absolutely not, for several reasons. We're going to take a look at them. First of all, right now, are we pulling back into any type of support? That's interesting because the game plan remains that we're looking to buy off of support in this uptrend right now. So far, we're just 1% off, right? We're at 2.5% off the high over here. That's a nice pullback. What would it be if we pull back all the way into the trend line support? That's coming in right here. I would say around 30.70. That's a 5% pullback. Again, we continue to be buyers into support, this trend line support, right? And we're getting close to that. Not only there, we would also be a buyer off the 30.33 support. So that's right now, we're already off 2.5 off the highs, looking like now's the time to begin watching here for a reversal up, a resumption up. Good time to get back into the S&P. For those that did take profit, you should be trading this right now from a position of strength. What does that mean? Is that you're neutral right now. You don't always need to be in the market. You shouldn't be shorting this. Some people are short the Nasdaq right now, and they might think that they timed the most perfect entry, but what you're doing is that you're picking tops. Nasdaq trading earlier today at new all-time highs. When you are shorting instruments that are making new all-time highs, you could get lucky every once in a while. And if you got lucky, are you taking profit now? Or do you think that you just picked the top and that maybe we're going down and maybe we're even testing the March lows and or breaking them? In that case, hold on to your trade. You have a huge amount of potential over here. However, that's not the camp that I am currently in. I'm actually looking here as the Fed continues to go ahead and print. We have more stimulus coming soon. You know what happens when asset prices are inflated? They rise, they go up. That's what I'm looking for. Yes, I'm aware of what's going on around the world, specifically right now in California, rolling back, moving out of lockdown. Not really promising here, but again, we're going to have a lot of stimulus going into this 2020 election coming directly from the government, as well as asset prices do sell off. You rest assured the Fed is going to be there. The Fed is going to be there to do whatever it takes to prop up these asset prices. Now, if we see a break of important technical levels, if we break our trend line coming in at 30.70 right now, if we break our support at 30.33, at that point, of course, it looks like at that point that the sellers have control. We're going to be involved. We're going to be doing what we can. Maybe we take out 29.44 at that point. Then we're looking at much lower lows. That's where we want to be involved on the downside. None of that is happening right now. Do you ride this any further? If you are short, if you're short, right? If you shorted the Dow or the S&P, I mean, shorting the Nasdaq new all-time highs, that's hard. I think you're counting a trend here. I think you have to be very, very careful. Even if you taking profit now or take profit if we go down as far as any of the support levels, in the long term, you just practice a bad behavior that's going to inhibit you from actually reaching your goals in trading. Picking tops and bottoms is a losing strategy. Don't do it even if you get on the right side of the market that one time, because the other 9 times you're not going to. Again, we're looking right now for a pullback, maybe into the support here at 31.53. The trend line support coming in at 30.70, and below that, a pullback to 30.33. We've pulled back already 2.5% off the high, which was also the June high. You could see that double top being put in right over there. Is that a reason to go ahead and sell this? No, not yet. Not at all. Actually, now that we have bounced off this, resumed off this, been rejected at that resistance, still looking to step in and buy. I'm not a seller up here. I'm not selling equity markets until they break some important technical levels, because I'll tell you why. Because right now they have a lot behind them. We're going to look at that 1 second. We're going to look at what's coming up in the next 2 weeks. But what I'm looking to do here, now that we have been rejected in this area, right, now that we come down into this support, I'm looking for a resumption out of this towards the upside as a place to get long here. And maybe we're going to go ahead and break out this June high now. That's the side of the market that I'm on. A couple of things that I do want to go over with you. Now, early this morning, we were looking at stock markets, Nasdaq making new all-time highs. We were looking at all of the markets really extending their rally coming out of the weekend into a risk-on mood. And the headlines were showing that it was the $3 trillion virus rescue that's inflating the market bubble, because the market is in a bubble right now. It is clear the market is in bubble. The reason behind that bubble has been the expansion, the $4.2 trillion expansion of the Fed's balance sheet. That's going to continue. When I say that, this is the purchase schedule by the Fed for the next 2 weeks. Now, this comes directly off of their website, the Federal Reserve Bank of New York, which openly tells about when their purchases were coming in. You're looking at some big numbers, approximately $4.5 billion a day averaged in. Here you could see a graph of those treasury purchases, and you could see that why they've, since the peak of the crisis, have wound down. They're still averaging almost $5 billion a day, or about $80 billion a month. $80 billion a month. Now, the markets are coming off on this news right over here that the Fed's Kaplan says that the emergency facilities to be pulled back as the economy improves. So, of course, this is not permanent or meant to be permanent by any means whatsoever. And as the economy improves, these type of purchases will be rolled back, as they should. That kind of spooked the market right now. But here's the thing, is that he said that they're not going to be left in place indefinitely, but there's no reason to see that they're going to be taken away anytime soon, as because the economy right now is looking absolutely fragile, right? It won't last forever. It won't last forever, but it is sure is lasting right now. And right now we're looking at those asset prices. Will it continue to be inflated as we are in a bubble? Trying to pick the top of a bubble, that's really difficult, trying to pick the top. I mean, was this any type of parabolic move that would suggest that we have topped? Not in my opinion. Not in my opinion at all. Over here we have the Nasdaq again making new all-time highs. The Dow is definitely lagging. Here's the June high. You can see the Dow. Here's the June high, and the Dow did not make it. All right. So Dow theory, you need all the indexes together making new all-time highs to really have that bullish confirmation there. We're not seeing that at all. And if you look at the S&P also at the same time, you could see that we made that double high to the June high. Dow lagging, right? Dow leading to the downside. S&P, Nasdaq, so much tech involved in both of them. They're talking about Tesla being possibly added to the S&P in the near future. The thing about the indexes are they are constantly rebalanced and those companies that are actually producing profit and gaining market share are added to the index, and those that are lagging are taken out. That's why it's the ultimate trend following instrument, and it's exactly that. So a lot of fear in the market today. I sense a lot of fear, right? As we've hit this double top, like a lot of traders trying to pick that top. I think they're going to get burnt. I think we're going to break out here to the upside above the June highs. And now that we've pulled back after taking profit and getting neutral, you have the opportunity now to go ahead and build yourself back into a position. This thing, in my mind, continues to look very, very bullish. What I'm looking at over here also is that triangle pattern that's being printed over here. Sellers are lessening. Sure, a breakdown below that trend line over here, that blue trend line we have. This is a warning signal, right? A break of this trend line here is a warning signal. A break below 33 really sets it off to the downside. I'm looking for a resumption back into this resistance and or a break of that resistance. Now, it doesn't mean that we're going to pull all the way back to the support here at 31.53. We may, and that might not hold, and we may test the trend line again coming in around 30.70, and that may or may, I don't know if it's going to hold or not, but I know that the way that we get ourselves into trades by waiting for the test and then waiting for the resumption out, it doesn't mean that every trade is going to work out, but you're going to be on the right side. That's what we're waiting for over here. I just want everyone to understand or at least know, again, we got out of the market. We reached our profit target, and now that we're down, back down 2.5% here on the S&P off the high, getting ready to watch for an entry here to the long side. Everything continues to look good. Markets are not yet crashing. Markets are not rolling over. Markets are not in any type of threat. Most likely, the market eats this up. We'll see if this becomes something bigger. If this becomes something bigger as soon as this week, we'll know when our technical levels are there, and we'll be able to get ourselves on the right side of the market. All right, let's take a look at gold. Gold trading above 1,800 still. Look over here. If you drop down to the 4-hour, this was brought up this morning during the live stream. This looks like a bull flag here. You could see highlighted in the blue on the 4-hour of gold. And you could see that it broke out over here and is now retesting that breakout again. This is a perfect setup over here. You could see this playing out on the 8-hour as well. It's just a little cleaner, the bull flag on the 4-hour, but you could see it playing out over here at 8-hour, especially this time of day. Again, you're seeing that resistance, that broken resistance being tested now, holding as support. A resumption up off of here is exactly what you're looking over here. Anyone looking to sell gold, you're on the wrong side of the trade. You're looking to buy off of support while we're in an uptrend and continue to do so. Silver also, textbook setup for us. Someone, I think it was TJ, no, it was, I know exactly who it was, on the comments was looking for a textbook setup for here when we have a test of a broken resistance and then a resumption out of it. And here you could see this line over here at 1842. This was the resistance as it broke out over here to the upside. And this is why we don't chase the breakouts. They get away sometimes, and you can see the perfect pullback into the broken resistance, holding as support here, resumption upwards, entry. Silver continues to look very nice over here. Bitcoin is lagging. Bitcoin's lagging almost everything right now. Huge day on Bitcoin as the difficulty adjustment went up to new all-time highs, as is the hash rate. The network of Bitcoin is the most secure that it has ever been since the inception of Bitcoin. Very positive here as we are getting ready here for the next move on Bitcoin, for the next up move on Bitcoin, the next leg to take us to 10,400 to test the heavy resistance up there and to see if we could enter the bull market. But Bitcoin right now continues to lag. Now's the time to continue to build up those positions, because sooner than later, Bitcoin is going to be leading the way. Also of note is the dollar today. Let's take a look at the dollar. The dollar was trading. Also of note today is the dollar. The dollar trading softer after being rejected at the 97 resistance. Currently over here, testing the low of 96.20, seeing if perhaps it's going to go ahead and push another leg down, perhaps even test 95.20 in the coming weeks. That's what we're looking for here. Maybe that's going to be in early August. On the upside, we always want to know where we're wrong here. On the upside, we're looking for a weaker dollar unless we break the 97.73 resistance we have over here. Last week, we were rejected strongly by that level. The week before, we had touched it. That is a near-term double top. If we break above that level, then at that point, we're really going to start looking for a stronger dollar. Because I think if we break above that level, I think we blow right past this trend line over here and into the 98.30 resistance. And that's the big test. If we break above that for whatever reason, the dollar is strengthening. That's the trade. That's not the side of the trade I'm looking for. I'm looking for continued and further dollar weakness. You could see this playing out well on the euro US dollar. So let's take a look over here. Euro US dollar maintains, testing this breakout here. This trend line over here, if you take a look, goes back 5 years. It's a big level because a breakout above it opens up this next resistance line, which is coming in right now somewhere around 1.16. It's a big move. There's about a 250 There's about a 250 pip move into the next area of resistance if this breakout holds. Now, it doesn't mean that we're going to go straight up to there. You've seen times in the past, like over here, well, that was a fake breakout. I take that back. Every other time it's broken out, it's reached the upper trend line. So that is the target. That's what we expect, that if we do break out, that's what we're targeting. All right, everyone, I'll see you all in the morning where we're going to be taking a look at the market together. We go live a half hour before the U.S. equity markets open at 9 o'clock a.m. Eastern time, Monday through Friday. Everyone, have a great day. Looking forward to reading the comments below, and I'll talk to you later.